Thank you for joining us on today's episode of Tax Matters. It is still in order to celebrate the news that we broke last episode with regard to the gargantuan performance of the FIRS in the month of June 2021. Information that came out of the FIRS in the middle of last week was to the effect that a whopping sum of 650 billion naira was collected in the month of June alone, the highest revenue realized in a single month since the COVID-19 pandemic set in, and also since the assumption of office of the management of Mr. Muhammad Nami. According to Mr. Nami, this feat was achieved as a result of the efficiency and effectiveness of the tax promise solution, notwithstanding the challenges and resistance faced in the early stages of its adoption and the downturn orchestrated by slow economic recovery. Still on the statement, Mr. Nami reminded taxpayers of the one-off one-month extension granted for the filing of companies' income tax returns by taxpayers with December 31, 2020 accounting year end, whose statutory tax returns were due not later than 30th June 2021. Mr. Nami urged taxpayers to take advantage of the extension as it provides an opportunity for all taxpayers whose company's income tax returns were due in June 2021 to file up to the 31st of July 2021. Welcome to our Tax Law Clinic. Today, we are looking at the tax obligations of limited liability companies. Limited liability companies have taxing obligations to the three tiers of government, even as the Federal Inland Revenue Service, representing the federal government, is their primary taxing authority. But before we move on, we have in our hands a press release from the Federal Inland Revenue Service to the effect that it has appointed commercial banks to freeze and recover 1.8 trillion naira from the accounts of MULTICHOICE Nigeria Limited and MULTICHOICE Africa. The FIRS has appointed all bankers to MULTICHOICE Nigeria and MULTICHOICE Africa as agents to recover the sum of 1.8 trillion naira from the accounts of MULTICHOICE Nigeria Limited and MULTICHOICE Africa, operators of DSTV and GoTV satellite TV networks. According to the FIRS, the decision was taken as a result of the continued refusal of MULTICHOICE to grant FIRS access to its servers for audit. It was discovered that the two companies persistently breached all agreements and undertakings with the service, that they would not promptly respond to correspondences, and that they lacked data integrity and are not transparent, as they continually deny FIRS access to their records. In particular, MULTICHOICE Nigeria has avoided giving the FIRS accurate information on the number of its subscribers and income. The companies are involved in the under-remittance of taxes, which necessitated a critical review of the tax compliance level of the companies. The statement added that the group's performance does not reflect in its tax obligations and compliance level in Nigeria. The level of non-compliance by MULTICHOICE Africa, the parent company of MULTICHOICE Nigeria, is very alarming. The parent company, which provides services to MULTICHOICE Nigeria, has never paid value-added tax since its inception. The FIRS has taken this step with the backing of extant laws. The affected banks are required to sweep balances in each of the above-mentioned entities' accounts and pay the same in full or part settlement of the company's respective tax debts until full recovery. This should be done before the execution of any transaction involving the companies or any of their subsidiaries. It is further requested that the Federal Inland Revenue Service be informed of any transactions before execution on the account, especially transfer of funds to any of their subsidiaries. That brings us to the main business of the day: tax obligations of limited liability companies. Limited liability companies pay companies income tax, value-added tax, education tax, capital gains tax, withholding tax, stamp duties, and the Nigerian Information Technology Development Levy to the federal government. They also act as agents of VAT collection for goods and services sold or rendered by them. With regard to state governments, limited liability companies act as collecting agents for the personal income taxes of their employees for onward remittance to the state government where they are domiciled. They also pay business premises registration fee and annual renewal of same. The important point to make at this juncture is that it is important for the business owner to arm him or herself with correct and accurate information on tax and other obligations, both at the outset and in the course of running the business as a going concern. Yes, as a limited liability company, your primary taxing authority is the FIRS, but you do have a location for your business and you have a host state. In this regard, let us hear from some of the chairmen of State Internal Revenue Services.
The major sources of IGR, as allowed by law, basically comes from personal income tax. That's the bulk of the taxes that we collect. Then there are some other land-based taxes which, by the last 2 years, will consolidate into what we call the land use charge law. That's paid once every year by every landowner or every property owner in Enugu. Then you also have the motor vehicle administration, which is the taxes that come from people buying and using vehicles on the roads in Enugu State. Then there are other taxes and levies collected by various ministries for the services that they render to the public. Ministry of Transport, Ministry of Commerce and Industry, Ministry of Agriculture, Ministry of Forestry, then the State Sanitation Agency, the Enugu State N650billion, also collects some levies every month to keep the state clean. So those are the major sources of tax revenues in Enugu State.
Malamanga Bulama was until recently the executive chairman of Borno State Internal Revenue Service.
There are numerous sources of revenue in Borno State. You know, as per the provisions of the Personal Income Tax Act, all taxes that are collected by the Internal Revenue Service are similar and the same in order to get uniformity in the Federation. But the major taxes that are being collected by the Board of Internal Revenue account for most of the tax revenue that we get in Borno State. Chief among them is the personal income tax, which is either collected through the pay as you earn or through direct taxation. Other MDS, which are saddled also with the responsibility of collecting tax, also do their own part. This includes, you know, fees, rents, sales, and fees and taxes on property, and also the road taxes.
From Borno State to Ogun State, the story is the same.
The major sources of IGR is payee, which is for any state is the large, even at the federal, they're driving a big percentage out of that. And then you have what we call the back duty. Back duty is tax audit. And then again, you have withholding tax, whatever. There are various revenue lines, but in terms of the major ones, you see payee accounting for close to 70% or more in any state internal revenue service. And the back duty is just the aspect of the fact that those things that you were unable to comb in the desk review for your day-to-day payee compliance and whatever, you send somebody out there, it may be a consultant, it may be your own team, to go into the companies, do some kind of audit, and then you get reviews back into various years. So the major source is coming largely from that back duty, which is tax audit. But when we talk about IGR, it is not just internal revenue service. there are other MDAs, ministries, departments, and agencies of government that are generating revenue. So, but Internal Revenue Service, being the one that generates over 65% of the state's IGR, is very significant. So you still have the balance of the 35 thereabout coming from all other ministries, departments, and agencies of the government.
There are reports that limited liability companies are also not immune to local government levies and charges. For example, signage and mobile advertisement levies, parking permits, especially in urban areas, and a host of other levies and charges. This has led people to conclude that there is incidence of multiplicity of taxes or double taxation burden on business owners. In various states, efforts are being made to reduce the burden of multiple taxation on business operators, especially with regards to the interface of local government with businesses located in their domain. For example, as far back as 2010, the Lagos state government promulgated what it called approved rates chargeable in local governments in the state, under which it harmonized the revenue heads collectible by the local governments with a view to harmonizing rates and collection across the state. The story is the same in many other states.
When you talk about the state, you need to look at it's not just the state as a state. Within the state is the local government. So as a state level, you need to understand what can you do to really expand the tax net rather than deepening. When you deepen the tax net, Amaka, for example, is paying 5 naira monthly for tax. Oh, has he actually done very well? I come to Amaka, look at the areas he's not doing well, so Amaka can pay 7 naira. But there are other people out there that are not paying. Have I really reached out to them? I need information. I need data. And at the local government level, do they even know what taxes they should be getting at the local government level? Radio licenses, TV licenses, even some things that relates to aspect of markets. How are you being ingenious? How are you encouraging the people? So I won't say that they are not doing their best, but it is based on the level of information and experience and exposure of whoever is sitting in there. So I will say that they are trying their best relative to the level of information that they have, and that's just it.
With the harmonization of revenue collection across some of the states, that is already happening. Like my state in Kaduna, we begin to see some sense of collaboration with the local government. Even though we are not where we want to be, we are still pushing the local government chairman to begin to support this particular noble idea of harmonizing the tax collection and also making a single authority to be the only body responsible for revenue collection in the state.
Mr. Odo emphasized the need to build the capacity of revenue collectors at the local government level.
The country is doing very well currently, but there's a long way to go for us to get to promised land. The first thing that needs to be done is that the need to review a lot of the laws that have to do with revenue collection. A lot of those laws are antiquated. Some collections you make, it's more expensive to collect some taxes than the tax that is being paid itself. This is because some of those laws were made in the colonial days and have not been reviewed till now. So you need to review some of those laws to bring them up to date. At the local government level too, there's a lot of leakages going on because government is not well developed at that level. And that's why if you notice in some states, some taxes are being taken over by states to collect. I believe if you do that, you're depriving the local governments of the opportunity to develop normally. So we need to strengthen the local government so they can collect the taxes that have been given to them to collect by the Constitution. That's not being done currently, and the states are getting frustrated, which is why they're taking some of those taxes from them. They pass laws with the State House Assembly to collect. That's good, but something that will clear that problem holistically is to begin to develop the manpower at local government level to ensure that they collect the taxes they're supposed to collect.
In Ogun State, The Revenue Authority has been able to cooperate and collaborate with the Transporters Union with a view to not only collecting taxes from them, but minimizing their nuisance factor in revenue collection.
The operator in the informal sectors are those we refer to as the unorganized private sectors, like the transport unions, like the market women, the artisan. The population is huge, but the contribution to the GDP is very, very low. And that is why concerted efforts are being made to make them tax compliant. In Ogun State, as far back as 2016, Ogun State has succeeded in bringing the informal sector, specifically the transport union, into the tax net. And this, in fact, made Ogun State a reference point to the extent that Ogun State was invited for IGR peer learning event, which took place in Sheraton Hotel in Abuja in October 2017. And so since then, efforts are still being made to ensure that we bring more of them to the tax net, and the response has been encouraging. So to a large extent, we have been able to make the informal sector to be encouraging, and it's a continuous process. The transport union has been the most cooperative and supportive because they have embraced our ticketing arrangement, and they have been doing wonderfully well. So they contribute the lion's share of what we are getting from the informal sector. After that, you can talk of the market women too. We have succeeded in penetrating the market through their Lodger and Baba Lodgers, their heads. And so those two are also contributing, but not as much as we are getting from the transport union. Then we can equally talk of the artisans. The artisan tools are coming up. So, and then we are equally trying to harmonize our taxes and levies so that the issue of double taxation, multiple taxation will be reduced. So the harmonization is in two forms. We are harmonizing between the states and the local governments. So local governments are complaining that the states are collecting the state is collecting their revenue, while even within the MDs too, there are complaints. So a committee set up by the governor, Excellency President Abuja MFR, headed by the Honorable Commissioner for Finance, is already working on that to do a kind of harmonization so that the issue of multiple and double taxation will be reduced in the interest of the tax-paying public. We are actually doing this to improve our ratings in the ease of doing business.
Back to Borno State.
The 1999 Constitution and the Personal Income Tax Act 2011 as amended makes provision, for the establishment of state joint revenue committees. It is expected that at that committee, the state and the local government will, that body will give, the administrative and impetus to the administration of taxation. And apart from this also, there is this effort by the Joint Tax Board also, to harmonize the collection of taxes in the Federation. To that effect also, there is that list of collection enacted in order, to have uniformity in the administration of taxes.
Back to our advisory. It is also important that the business owner secures the services of certified tax practitioners, as it is not good for business to try to navigate the field by oneself. Of course, it is also an absolute necessity that before you begin to operate a business, you must register the business, and that is done for limited liability companies that we are discussing today at the Corporate Affairs Commission, CAC. These days, things are a bit easier as registration with the Corporate Affairs Commission comes with the issuance of Taxpayer Identification Number, TIN. We must counsel that you do not register a business when you are not ready. Read my lips. Do not register a business when you are not ready, because immediately a business is registered, tax obligations begin. For example, from day one, monthly VAT filing becomes necessary whether you have collected VAT on behalf of the government or not, because even when that is the case, there is what is called new filing. By virtue of the Finance Act 2019, failure to file VAT returns in any particular month attracts penalty of 50,000 naira in the month of default and 25,000 naira for every month in which the default continues. Filing of VAT returns must be done every month, whether money is involved or not. Filing and remittance of pay-as-you-earn on employees' emoluments are also due every month, precisely on the 10th day of the month, following the month of payment of salaries and wages to the employees. So it is with some of the other taxes we drew your attention to earlier in the program, especially tax obligations to the state where your business is domiciled, as well as to the local government of your area of operation. With regards to companies' income tax, the obligations of a limited liability company become due 6 months after its accounting year end. Now, this is the way it works. Companies are free to choose their 12 months accounting year. Could be August to July of the following year, could be April to March, or the most common, January to December. The choice is yours, except for banks that are obliged by law to use January to December. If you have chosen January to December, for example, then you have 6 months after your accounting year end to file returns and pay the due company's income tax. That means June 30th of the following year. At that point of filing, other taxes are due: education tax, Nigerian Information Technology Development Levy for companies that are liable to the levy. Other taxes become due at the time of transaction. For example, in the case of VAT, whatever the company pays or collects on behalf of the government in a particular month must be reported by filing and remittance. In the same vein, from time to time, some transactions attract withholding tax, especially for companies that take contracts from government agencies and oil companies. In that case, the contract giver withholds appropriate withholding tax from the awardee and remits to the FIRS, following which withholding tax credit note is issued to the awardee to be used to offset part or whole of its taxes at the point of filing. Capital gains tax also arises from time to time in the course of doing business, and sums due are to be remitted to government coffers as they become due. The same goes for stamp duties, which begin at the point the company registers with the CAC, at the point where agreements are signed, etc., etc.
Every day, my people dey for work. Some dey do office work, some get them own business. So all of them want good road, constant power for better life. Oh, whether na office work, oh yeah, pay your tax. Whether na your own business, oh, pay your tax. If you want a better life, oh, pay your tax. Na your civic responsibility, pay your tax. Better soup, na money cook am. Oh yes. Nothing goes for nothing, my brother. If you want potable water, security and hospital for make life jolly.
That's right. Good roads, good hospitals, portable water, adequate security all come from taxpayers' money. Play your part in making Nigeria great. Everybody, small scale, big companies, entrepreneurs, do the right thing. Pay your tax. This message is from the Federal Inland Revenue Service, FIRS.
We bet today's episode has gone beyond Taxation 101. It is fully loaded, even if we say so ourselves. More of these will come your way in subsequent episodes of Tax Matters. Go out there and have a good week, but remember, it pays to pay your tax. Thank you for watching. Bye for now.